If I had a crystal ball, then I would have been able to tell you in 2020 that the market would take a nosedive in March of 2020, somewhere between March and April, and be through the roof between sometime in July and August. With a crazy economic cycle since the 2020s have kicked off, COVID has opened the floodgates on economic insanity lately for the 2020s so far. You have a crazy economy that is strong, but very uncertain. You have record high inflation that's being fought right now, record high interest rates in relative to the last 10 or 12 years or so when it comes to the Fed's fund rate, and a plethora of other factors like war in Russia and Ukraine, etc., affecting all kind of things globally, supply chain issues, etc. All of these things are having a major impact on your 401k. And if I had a crystal ball, I'd have been able to tell you that in 2020, and I'll be able to tell you what I'm going to tell you today in this video going forward. So pay attention to the end of the video. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like this video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So how do you save your 401k in the midst of economic chaos? For many of us, our 401k is one of our top retirement assets that we invest in on a consistent basis. Many of us do not, especially depending on our age bracket, have a lot of faith on what it's going to be like with Social Security by the time we get to retirement age. And there aren't as many vehicles like pensions around like they used to be. So the 401k and other, employee-sponsored retirement plans are kind of the hot thing at the moment. And it kind of leaves it mostly in our hands to figure out our retirement savings. How do you stabilize and hopefully save it to continue to hit its goals for your retirement plans in this economic chaos? And the secret sauce is rebalancing. That's right. It's simple, but very powerful. Something that you may not know about or not be being guided to do, because unfortunately our 401ks are one of those types of accounts we don't have 100% control over, but we have kind of 100% responsibility in the same time. So you don't have a financial advisor or some financial professional tapping you on the shoulder every hand, once a year, twice a year, telling you when was the last time you checked your 401k. Well, I'm telling you here in this video that you need to be checking your 401k. Normally, I'd say once a year or semi-annually. With the economic circumstances we've seen since 2020, I am telling you, you need to check your 401k every 3 months on a quarterly basis. That's right. You should be revisiting your 401k and its performance every 3 months or so. The goal of what you're looking to do is to balance the risk reward ratio and to make sure that that account is on track for its target goal or as close to it as possible. Being benign and going in the dark on this is not a good idea. You'll look up at it one day and it's going to be 20, 30, or 40% short of what it could have done because you haven't been paying attention. Anything that you invest in needs your time and effort. Your 401k is no different. So now that you know the frequency, you know the skill, you know what you need to be doing, you know the frequency, how do you do that? Well, you need to reassess your time horizon, your risk, management, like your risk tolerance rather, and you need to check your target. Has your target changed? What you need this portfolio to be at. Hopefully it's not your only investment for retirement, but it's probably going to be one of your bigger ones. So you need to make sure, hey, is this thing still on track for where I need it to go? Your time horizon. What age bracket are you in at this time by the time you check it? How are things going? The performance. These are the kind of things you need to be checking. If you're not somebody who feels competent enough to do these things on your own, then you need to find a financial professional who's willing to take the time out to do it for you. If you have a financial advisor or financial planner that you're working with or can work with, they'll typically take a look at other accounts that may not be accounts that they have provided for you or getting paid off of, just as a total plan for you, just as a complimentary total assessment for you. They'll typically offer that for you. So just check into that if you don't feel confident doing this on your own. But I promise you, this is the secret sauce to keeping your 401k from taking nosedives when crazy things break out in the economy like we've seen the last few years. So checking your time horizon, checking your risk tolerance at that time, checking to see how on track this thing is. The next thing you need to do actionable is you need to see if you need to be selling off. You need to check your asset allocation overall, right? So that means how far into stocks, how far in bonds are you? And is that still a good idea? Equities in 2022 was not a good place to be, but there were several different bonds, typically some of the longer term bonds that were a good place to be. So you need to be watching, what you're in stocks and bonds, do a little bit of homework on what's going on in the market, checking stuff like the yield curve, Fed forward guidance, basically with them telling you where they're headed with rates, the inflation numbers. Again, if this seems like a lot to you, find a financial professional who can help you do these things, because I'm telling you, this is going to save you a lot of money in the long term and hopefully help you continue to earn. You also want to check and see, once you figured out, hey, this is how deep in stocks, this is how deep in bonds I am. Should I stay here? Should I sell off some of these? Should I contribute my future contributions to more of the other side of this? How do you balance out your allocation so it can stay successful and working for you the way it needs to? It's not always a great time to be 85, 90% into stocks. It's not always a good time to be 20 or 30% in the bonds and back and forth. So you need to be checking this right now with the instability we're seeing on a quarterly basis, every 3 or so months. That is my recommendation at this point in time. So if that's the case, little things you can check as well. If you're sophisticated enough or have a financial professional or someone assisting you to do this, double checking the types of investments you're in, index funds, mutual funds, making sure that they're not like fee riddled and chewing you up with fees, or they're still individually performing well, or how are they performing? Are they weighing your portfolio down? Check these things out. So really quickly to close this video out, rebalance your portfolio. How often? Every 3 months or so, until the economy starts to stabilize or look like it's foreseeable for at least a year or two out at a time. And once you do those two things, you want to check your allocation. How far in the stocks, how far in the bonds, and is it a good idea right now based on the economic data that is out? Once you do that, index funds, mutual funds, ETFs, which one of these vehicles is serving me the best and which one's holding me back? Check on that, make the proper moves, sell off if you need to sell off, contribute more where you need to contribute more, and check on this on a every 3 months or so, 3 to 4 months or so basis until things stabilize out. I promise you, it'll save you a lot of money, a lot of losses, and it'll help your portfolio stay on track. This is JP from Blueprint for Prosperity. I'm checking out. I know this was valuable content to you. Comment down below on what your experience with your 401k has been since 2020. I'm very eager to know. And let me know what you think about this rebalancing concept and how you're going to take action with it. As always, I want you guys to stay focused, stay in motion. I'll see y'all soon.